We're really pleased to present the Conscious Investment Management 2021 Impact Report. At Conscious Invest, we focus on having a social and environmental impact in all of our investments. And these aren't just words on a page. It's really important that we're as thoughtful about the impact of our investments as we are in the financial returns. And the impact it has its own section in our investment papers, for example. That thoughtful assessment is really important. But transparently communicating that to you, our investors and stakeholders, is as important in what we do. The impact report, which is it's a detailed document, I think it's about 84, 85 pages at last count, glossy PDF, is going to be landing in your inboxes in the next few days. And we're really excited to present a summary today, but also answer any follow-up questions that you might have after you receive the report. Now, when we think about measuring and reporting on our impact for the purposes of things like this impact report, we think about it in two buckets. The first is our outputs and then our outcomes. Outputs are numbers. They're numbers that they're objective. They're easy to measure. We can have them audited and we can tick them off in an Excel spreadsheet. And they include things like the fact that since inception, Conscious Investment Management's funded 48 distributed solar assets. So 48 different roofs with solar systems on them. That's the equivalent of planting 10,249 trees per annum. We've funded 177 social and affordable housing assets so far, apartments so far, as Casey mentioned. They're a mix of 1 and 2 bedroom properties. That'll be about 250 people who can move in, as well as 84 specialist disability accommodation apartments around Australia, in addition to a number of affordable housing and seniors housing dwellings. They're the outputs, they're the numbers, and they're summary metrics and they're very important, but they only tell part of the story. What's more important than the outputs are the outcomes, the second phase. And they're deeper considerations about how our investments are impacting beneficiaries. It's the assessment of outcomes, that second phase, which is so important in our impact report. In the report, when you receive it, you'll see that we've applied the leading global standard of impact measurement. It's called the Impact Management Project, or the IMP. We apply that to each of our investments. The IMP requires a detailed consideration of an investment's impact, its level of additionality, as Andrew mentioned, and an assessment of what would have otherwise happened in the absence of our investment, and a consideration about impact risks, what could go wrong in this investment. The IMP is used by a number of global fund managers, and for many of you running portfolios with lots of different impact funds in it, you should be able to aggregate up metrics at a portfolio level for your investment. So step one in our process is applying the IMP, and we do that to all of the assets. Step two is we categorize the impact of all our assets on a scale from 0 being the lowest impact to 5 being the highest. Investment scoring 0 to 2 we call avoids harm, or an A. Investments at 2 to 3.5 are a B, benefits people and planet. And investments at 3.5 and above contributes to solutions, the highest level of impact we can have. We focus on making sure all of our investments hit the B and the C category, the higher impact category. The final step of our process is, of course, transparent and clear reporting to you. That's full transparency in reporting, but it's also clear, and making sure that the impact is digestible and gets across any risks that there might be. Set out on this slide is a table that summarizes how we think about that impact measurement. And specifically here, we've applied it to the Victorian social and affordable housing investment. When we're measuring the impact in detail, the outcomes in detail, we think about 5 different impact dimensions. The first dimension is what. What outcome is an investment seeking? And why is that important to the beneficiary class here? In this case, we're building, the what is that we're building 1 and 2 bedroom apartments around Melbourne, and relative to other available social and affordable housing, we think they're well located, they're generously sized, and they're in buildings with high amenity. So that scores a 5 out of 5 on the rating spectrum. The second dimension is the who. Who are the stakeholders and how underserved are they? Who are the beneficiaries and how underserved are they? We then look at how much, and how much has a few different subcategories. Has scale, how many stakeholders are experiencing the outcome? Depth, what degree of change have they experienced? And duration. How long are they experiencing the outcome for? How do we make sure we have long-lasting, stable, and ongoing impact? Contribution, which is the fourth dimension, is my personal favorite. This is the level of additionality. What's happening as a result of our investment that wouldn't otherwise happen? In the case of social and affordable housing, an area with historical significant underinvestment, our assets are having a positive contribution. They're creating new things that wouldn't otherwise exist. We need to be clear, as to all impact investors when they're funding investments, that it's not the case that capital is flowing to something that would have happened anyway or isn't required. And risk is the final dimension of assessment. This is an assessment of the likelihood that the impact we're targeting isn't what happens, or is different to what we otherwise expect. In this particular investment, some of the risks we faced were ensuring there wasn't delivery of poor quality housing. We were thinking about tenancy matching, and we have a really insightful investment committee member who was focused on this from day one as an example. And the third was making sure that any tenants who move into the property who require wraparound supports are receiving that. When we aggregate up the assessment across these 5 different dimensions, this investment landed at a 4.8 out of 5, which contributes to solutions, the highest categorization, as did a number of our other investments in solar and specialist disability accommodation, while the seed assets and seniors and affordable housing were 3 benefit stakeholders. So again, all the assets meeting that B and the C metrics, which we target.